Hello and good afternoon to everyone that's currently tuning live to us on another episode of Phillip Trading Podcast. I'm your host for today, and my name is Trent. With me here today is my colleague Sherin, a senior dealer and marketing executive from Phillip Capital. How are you today, Sherin?
I'm fine, thank you.
Okay, good to have you here. So for today's podcast, we'll be discussing on the topic, will reopening border with China help Hong Kong economy bounce back? So to our audience out there who are interested to learn more about investing and trading the Hong Kong stocks, do not miss out this podcast. Once again, I would like the help of all our beloved audience today to share this video to all your friends. The more people that are watching this video, the more we are motivated to deliver greater content to all of you. Okay, so without further ado, let's jump into our topic for today. Will reopening border with China help Hong Kong economy bounce back? So 2022 had been a bad year for Hong Kong as a year of economic devastation marked by raging fifth wave of COVID-19 infections, stifling pandemic curbs, business closures, recession and falling home and stock prices. Hence, the reopening border with China able to help Hong Kong economy to raise back. Okay, so Sherin, what are the main reasons behind the border reopening of China?
Okay, so first, thanks for your question, Trent. So now, I will talk about what is the reason behind the border of reopening of China. So, deadly fire in the rice apartment in Xinjiang actually initially triggered the weekend protests as this strategy causes by the government inhuman COVID restrictions. So the video spread of victims that desperately crying for help from the apartment buildings, but people could not escape or rescue enter because the entrance was sealed. So this is a common lockdown measure imposed by the local authorities. So it took the fire trucks more than 2 hours to reach the burning building again. So due to the barriers set up by the local authorities to keep people confined inside their apartments. So other than that, there are few heartbreaking incidents represent the human toll, which caused by the cruel zero COVID policies. So hence, China has erupted in the mass protest calling for the end of the country, restrictive COVID lockdowns, and the economic decline, which at the end of the China president, which is Xi Jinping, has decided to relax the strict of COVID control. Other than that, the Hong Kong will also reopen the border with China by the mid-January, which is the city chief executive John Lee said on Saturday, last Saturday, which is on the 24th of December, as the Beijing already accelerated the unwinding of strictened COVID-19 rules that has bettered the economic growth. Yeah. This is the reason why the border reopening of China.
Okay, yes, certainly the protests certainly put pressure on the China government to reopen the borders. Okay, so for our next question, do you think 2023 will be a good year to invest in Hong Kong shares, given the border reopening of China, and what sectors and companies should investors look at?
Okay, so this is the nice questions. So actually, for my own opinion, 2023 will be a good year to invest in Hong Kong shares, as there will be a big increase towards the Hong Kong economy after the reopening border of China, especially for those travel industries. So actually, based on the data, you can see before the pandemic, the tourism have made up 4.5% of Hong Kong GDP and employed around 257,000 people, accounting for about 6.6% of the total employment. So this is according to the government figures. Other than that, Hong Kong stocks also reached a 5-month high after China undertaking to boost fiscal spending following report factory activities and service continued to slump last month. Anyhow, the investor can look into casino stocks such as Sen China, Galaxy Entertainment Group, and Wynn Macau, as this casino sector will be having the biggest beneficiary compared to other sectors. So in 2022, casino revenue in Macau fell 51%, which is to an 18 years low, as the Beijing zero COVID restrictions keep away the tourists from the mainland China. Okay. So this is the question, and this is the answer for second
Okay.
questions.
Okay. Yes, investors can keep an eye on the sectors and companies that you have mentioned earlier. Okay, so what other catalysts or potential events in the coming months that could push Hong Kong stocks market higher?
Okay, so actually, China reopening is a positive sign for Asian stocks and global economic growth in 2023, but it also carry off some inflation risky. So it's a good thing that China done its role in driving the demand for the global commodity markets. So, based on past few days news, all official at the Fed Reserve, which is December 13 to 14 policy meeting, agreed that the US Central Bank should slow the pace of its aggressive interest rate increase and allow them to continue increase the cost of credit to control inflation, but in the gradual way mean to limit the risks to economic growth. Other than that, the minutes of the meeting which released on this Wednesday, we show that policymakers still focus on controlling the space of price increase that threaten to run hotter than anticipates, and worry about there will be any misperceptions in financial markets that they are committed to fighting inflation was flagging. But officials also acknowledge that they have made some significant progress over the past few years in rising interest rate enough to bring down the inflation down. So as a result, currently the central bank still need to know how to balance the fight against rising price with the risk of slowing down the economy too much and potentially placing the largest burden on most of the vulnerable groups, choose higher than the necessary unemployment. So so anyhow, this is one of the things that investors should look out on the next Fed meetings.
Okay, yes, investors should look out for the US Federal Reserve decision on monetary policy on whether the tightening is peaking. So for last question, what are the potential risks in the coming weeks that investors should be aware if they invest in the Hong Kong stocks market?
Okay, so the first thing is they have to look out towards the policy between the Hong Kong and China, which is this is the biggest uncertainty. So if there is any changes towards their policy in COVID, so it might have an impact towards the current market situations because we will be open border by this 8th of January, but we're still not sure that how would the COVID in cases increase among the world. Other than that, Hong Kong side, they also worry that the Hong Kong local healthcare system might be overburdened after the border reopens and if the COVID cases keep increase. Other than that, the market volatility between the Hong Kong and China market will also become higher due to the reopening of the China border and the hope of economic recovery. So hence, investors have to cautious when they step into the Hong Kong stock markets.
Yes, investors should also monitor closely the number of COVID cases in China and Hong Kong over the short term. Okay, thank you for your sharing, and I hope it will help the new investors out there. And to our audience who are interested to invest in Hong Kong shares, currently we are having a special promotion until the end of this month on 31st January 2023. New clients that open a shares trading account with Phillip Capital can enjoy a low brokerage rate of only 0.08% until 31st January. So for more details, you can drop us a message on Facebook and our representative will get back to you. And now we have come to an end for today's podcast. If you have any question or any topics you want us to discuss next week, you can message us in the comment box below. Thank you for listening to our podcast and happy trading for the week. Thank you for your time too, Shireen.
Okay, so thanks, Trent, for the sections. So bye-bye.
Bye.